You're listening to the Generational Wealth Through Commercial Real Estate podcast. Your host, Will Smith, is a former NFL player that found his passion in commercial real estate. Every week, you will learn from industry experts everything you need to know to get started investing in commercial real estate to build generational wealth.
Hey, today's guest is Chris Salerno. He's the CEO of QC Capital. They focus on purchasing undervalued Class B, Class C properties that offer investors safe, reliable returns. Right now, the company is controlling 364 units, and they have $40 million worth in assets. Chris, how you doing today, man?
I'm doing amazing. How are you?
I'm doing good. Thanks for coming on today, man.
Yeah, thank you for having me. I'm super excited to add value to all the listeners. I'm super excited I've listened to your podcast before, and I'm honored to be on it.
Great, man. So obviously that was a short intro, man. Tell us a little bit more about how you got started in this investing game.
Yeah, very much so. So I started out, and we were chatting before this, I started out in the single family world. So selling single family real estate day to day, very quickly gained a success in that type of business. And that's when I merged my company with the number one company in the Carolinas. From there, I landed in basically their operation role and made them 46% profitable in 1 year compared to their 3 years of just being stagnant with no growth. During that time, it really, it was an eye-opener because I had huge goals for myself, my family, and the company now that I've created. And I knew that brokeraging real estate would just not reach those goals. So I started studying between 2008 and 2012 what asset class was the strongest, and it was multifamily. Yeah. That's when I started studying about multifamily, the ins and outs. I ended up hiring a mentor, and before you know it, just started growing the company very quickly. And yeah.
Cool. Now, the mentor that you get, was it one of the big companies that's out there right now, or?
He's a big guy out there. His name's Joe Fairless, but it's a private, very secluded group. He only takes 2 people a month, and it's been a phenomenal process. Everyone that's in it, great people to work with, and very excited about it.
Yeah. Cool, man. So you're focusing on multifamily. So why did you decide to choose multifamily asset over like self-storage or mobile home parks?
Yeah, great question. And I was actually talking to an investor late last night about this. And the reason why I chose multifamily is it's a necessity. Mobile home parks, yes, I know the top people in the mobile home industry, especially here in the Carolinas, I know. And they love mobile home parks. Yeah. Me personally, that's a different type of clientele, different type of tenant base, and your appreciation is not always there. You're normally buying a mobile home park in the middle of nowhere. 100, 200 units outside of a small city. Yeah. And from there, I don't see the appreciation of the property. Now, I don't buy for appreciation. I only buy for value add, where I can force the appreciation through renovating the units and increasing the rents. So that right there really just directed me straight towards multifamily, primarily Class B and C products. I'm a big believer in the Sam Walton. If a lot of people don't know who the Waltons are, they're the wealthiest family, I believe, for sure in the United States, possibly the world, but they own Walmart. Right. And they focus on 98% of the population. The reason why I don't focus on A-class is A-class is focusing on the 1%. They're like Nordstrom. Yeah. And when the market shifts, what happens? People stop shopping at Nordstrom, but they will always shop at Walmart because they need, toiletry. They need all that type of accessories. So that's how I treat it. So I treat that our business model is on that 98% of the population, where during a market correction, we are still able to cash flow very strongly. But we're also providing a better place for tenants to live. Yeah. We're going in there, fixing them up, making them look nice, feel nice, cleaning them up and cleaning the exterior, cleaning the amenities up. And that really helps them appreciate the property, and they feel like it's their own home, which that's what we strive to do is, cleaning these properties up for the tenants. Right. When it comes to storage, I've looked into storage. If I do storage, I will do brand new development of storage.
Yeah.
or a conversion of a warehouse.
Right.
I've been in contact with the CFO of Morningstar Storage. I don't know if you're familiar with Morningstar,
No,
but
I don't
they're
think I've heard of
huge
them.
here in the
Okay.
North Carolina, really. Yeah, they're very big. They have over, I would say by now, 100 properties. They have like
Wow.
$300 million funds, so they're huge.
Oh yeah.
Storage is not my niche. During a market recession, I heard it may get hit, but I don't think it may, because people still want to make sure their prized possessions that their family left them
Yeah.
is still in the family. So they'll go out and rent a storage unit, sell their house if they have to, and then go to an apartment complex.
Right.
So I
Right.
don't mind storage, but really haven't looked into it. Our main focus currently right now is multifamily B and C value add assets.
Gotcha. Gotcha. Now, as far as finding deals, like what are you guys doing to find your deals right now?
Ooh, yeah. That's I have conversations with operators all the time about finding good deals. My
Right.
fiance joked with me. She said, "What do you want for Christmas?" I said, "Just wrap a good deal under the tree and give it to me." Because that's all I want, is a good
Right.
deal.
Right.
It's very difficult right now, and we as top operators in the United States, there's a lot of discussion going on how are you finding good deals, and what's going on. And because there's so many bad deals out there, in my opinion, individuals are selling top dollar,
Right.
and they can, because the market is holding that right now. I think multifamily will still be extremely strong, because it's a necessity and more people are flocking towards it. Even senior citizens are
Yeah.
flocking towards it, which I like. To find a good deal, I'm big about brokers. As you know, you're a broker. I used to be a broker.
Yeah.
I build strong relationships with the brokers. When it comes to over 100 units on type of properties, it's extremely difficult to go direct to the source, because there's
Yeah.
multiple LLCs involved and everything's mixed up.
Right.
So I don't do any cold calling, any direct mail when it comes to that. I deal with the brokers, because the brokers have a lot of off-market deals,
Yeah.
and I know the brokers that deal with just off-market, and I know the brokers that deal with just on-market. So I build relationship with all the brokers, so they know who I am. They feel comfortable, because at the end of the day,
Mm-hmm.
and you can testify for this, if you had a single-family home and there's 16 offers on the table,
Yeah.
you legally have to present all 16 to the seller.
Right.
But during that process, you will let the seller know, based off of your prior experience, what broker you have worked with and how smooth that transaction
Yep.
went, what lending company that the buyer has that you've worked with previously,
Right.
and how smooth that went. So you can guide and help the seller make the correct decision, and the
Yep.
seller will listen to your guidance and normally will pick what broker can close deals and what lending company can make it a very smooth process.
Right.
So when it comes to that, that's why I build strong relationships with the brokers, taking them out to lunch, coffee, making sure you're staying top of mind if they had a baby, congratulating them the day of
Yeah.
having the baby, stuff like that. Staying
Yeah.
top of mind will definitely help you find those off-market or even on-market deals and get you awarded them.
Right. Right. So, I mean, there's a lot of people that's trying to get into their first deal, and they really don't have the experience behind them. So, like, what are you doing, or what's the advice that you can give to someone that's just getting into it to get the brokers to take them seriously?
Keep listening to your podcast. I mean, listen to podcasts. Keep
Yeah.
listening to your podcast. Listen to my podcast. Listen to everyone's podcast out there on multifamily investing, about real estate, so you can really soak up as much information as possible. Understand the SEC rules and regulations; those are
Yeah.
extremely important. Listen to YouTube videos. I'm on YouTube. I have two screens here, and one screen I work really mainly from. My second screen has my emails on it,
Yeah.
and I also have YouTube up there, listening to other operators, listening to other attorneys, property
Right.
management companies, listening to news companies about what's going on in the market.
Yep.
what market's hot for 2020. So I'm listening to that while I'm working, and if something catches my eye, I stop everything, I go back, rewind it, and I listen to it again thoroughly. So I
Right.
think that's very important to always educate yourself, because we're always learning. Laws and regulations are always changing, and it needs to be up to us to make sure that we're staying on top of it.
Yeah. 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 And that's a very good point, man. You want to be educated first and foremost, because if you go to a broker and you're saying, "Hey, man, I'm looking for a deal," they're going to start asking you some specifics, like, what year, what vintage, how many units, the A class, B class, C class. So if you don't know those things, you're saying, "I want to get into a deal," they're going to just kind of laugh you off and move on to the next person. So that's some good points there,
No, they
man, for
will.
sure.
Yeah. Oh, they definitely will. And I remember when I first left this, or it was during my single family industry, that I was looking at, like, I think it was like a 12 unit in the area, and I was
Yep.
trying to, owner finance, and I was trying to do all these things, and the broker was
Right.
like, you can't do that. And the seller's not going to do that. And I've never ever done that. And I'm like, well, from that, after that, I said,
Yep.
okay, well, if I'm really gonna make the leap and leave single family, go into commercial, I need to understand everything at a very high level. So that's when I started reading books. I
Right.
started listening to podcasts. I started looking on YouTube. I started going to the SEC website and studying the PPMs.
Yep.
And I got a great grasp of how the deals were structured and how everything was worded. So it helped tremendously.
Right, 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 man. Those some good points there for sure. So you've been in business for almost a year now, and you
Yeah.
guys are having amazing success. So, what were some of the biggest challenges? Because I mean, you're still new in this. What were some of the biggest challenges you faced when trying to get that first deal under your belt?
Yeah, great question. The biggest challenges is, one, like you said, getting brokers to trust you and know that you can close. Because at the end of the day, as a broker, they don't get paid hourly. They don't get paid on a salary. They get paid as a independent contractor, 1099,
Right,
on commission.
right,
So they want to know you can close the deal. That's all they
right,
want to know.
right.
And the seller wants to know that too, because the seller wants their money.
Oh yeah,
So really, building those relationships is key, and making sure the brokers know you can close the deal. I think when it comes to your first deal, it's always good to have a strong co-sponsor and KP
yeah,
on the deal. And the reason why is because it's important. If you missed anything, also through the capital raising process, I know raising capital, whether you do 506B or 506C, depending
mm-hmm.
on what you do, it's very important to have someone behind you as well,
Right,
because whatever you think you can raise, cut it in half. And especially on your first deal, it's
yeah,
extremely difficult, because they don't know if how you're going to operate the property. They don't know your
right,
business plan, as investors, and they want to make sure that they feel comfortable with you, and with the deal and the business plan for the deal. So it's always good, and I'm all about partnership and
yeah,
partnering and growing with everyone. So it's always good to make sure you have a good KP and co-sponsor on the deal with you.
right.
So those are a couple.
Got you, got you. Now, I mean, some people listening to this, and this is their first time listening to a podcast like this. Can you just elaborate to them what is a KP and a LP?
Yeah, key principle. LPs are limited partners. GPs are general partners. Normally, the GPs are the operators, the asset managers. They're making sure the property performs at its peak performance.
Yep,
KPs and loan grantors, they normally have a high net worth. They have the liquidity because they have to sign on the loan, because the bank requires
yep,
individuals who have the net worth and liquidity to sign on the loans, just in case if things go south, that individual has the liquidity to go ahead and dump into the property to make sure the bank gets their money.
right.
Because that's all the bank cares about, is they care about lending. They want their money. They don't care about
Oh
real
yeah,
estate. They just want their money.
oh yeah,
And then the LPs are the passive investors who are passively investing into the deal.
right, right. Thanks, man. I'm pretty sure that helps somebody out there.
Oh, well, that's what we're here for. We're adding value to everybody.
Oh yeah, oh yeah. So, what markets are you guys focusing on right now?
Yeah. That's always a good question. We focus very heavily on the Southeast, the Carolinas being our primary focus because
Mm-hmm.
I've lived in Charlotte, North Carolina for going
Right.
on 13 years. So I know this market and I know the Carolina market extremely well. We have opened our for the Southeast. We've opened for Dallas, Fort Worth, Texas,
Okay.
Orlando, Florida, Jacksonville, and Atlanta. Those are our other markets that we are focusing on currently. We've gotten some off-market deals in Dallas, so
Yeah.
that's an extremely hot market. I know a lot of operators
Oh
in
yeah.
that area, and it's like the Hunger Games out there. So, but if you
Right.
can, it is. But if you can build relationships with the brokers, they tend to go ahead and give you off-market deals.
Right. 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 Now, when you're looking at the market, what are some of the biggest things you're looking for? And population growth, um, jobs. Is there anything in particular that people not thinking about when they're looking into a particular market that they should be thinking about?
Yeah, great question. And when we look into a market, we look into markets that we know very
Yeah.
well, where I don't need to worry about the job growth. I don't need to worry about population because I know it extremely well. But I do put it on there for our OM, for our investors. But
Yeah.
if it's coming down to like a market, I used to live in Orlando, so I know that. I know haven't lived in Jacksonville or Dallas, but our underwriter is actually in Dallas, so he's boots on the ground there, which
Yeah.
is great, and I know a lot of people there. But when it comes to really analyzing a market, job growth will fuel population.
Right.
Because if you have a large diversity in jobs at a large count of individuals that they have, then that's going to fuel the population. So I look at the job diversity. I know there's some cities like Fayetteville, North Carolina.
Yeah.
It's a military base there, and it's heavily military. That is a city I do not invest in
Yeah.
because it's really concentrated just on one type of industry. Now, I understand it's government, but to me, I don't do that. So I want a large diversification in jobs, because that right there will tell me how strong the city is
Right.
for the future. And I always like to know who's coming to the city, who may be leaving the city in Fortune 500, Fortune 1000 companies.
Yeah.
So I'm aware, because investors also may ask that if they see an article. So really, the job diversification, the population growth in the past 10 years.
Yeah.
And if more jobs are moving there, like I said, the population will keep increasing. But it's always good to take a look at the last 10 years of population growth, and
Yeah.
especially between 08 2012.
Right. Right.
When the market took a really big dip, that really hurt the single family market. So it's also good to find out, what type of percentage. Was it a 10%? Was it a 40% loss in individuals when it comes to population for the cities? Those are our main key factors when analyzing a property. We analyze the location of the property. I know a lot of people say location, location, location.
Right.
And it's true.
Right.
That's why I don't buy mobile home parks
Yeah.
because of the location. I buy nice B and Class
Yeah.
C assets
Yeah.
because of location, and the appreciation's just the cherry on the top when we sell.
Yeah.
So when it comes to it, location, we want to make sure it's very convenient. If it's walkable, to certain shops and restaurants and grocery stores, what's the driving distance to the airport, to the shops, to a local mall. Those are our main key points when it comes to it. We like to know the location, the type of product that's surrounding it, the type of job employments. If it's a huge office complex nearby where all the employees can just walk there, that's a benefit.
Yeah.
So things like that when it comes to it. The crime on the property and in the surrounding areas, that's very important to understand and know what's going on, because that will also determine your tenant base that you have. And then when you do your pro forma, it will also determine what you can charge and rent, based off the crime in the area. Schools are another big thing. We look at school districts. I know here in Charlotte, we have some wonderful schools. So school districts are very big, because a lot of people, if you have a really good school, normally, from you being a broker as well, you would know this. Normally, the median house price is pretty high
Yeah.
because you have good schools, because everyone
Right.
wants to flock to those good schools. So they're going to go ahead and increase the housing prices and new construction in the area.
Yeah.
So with individuals that can't afford those 4, 5, 600,000 for a median house price, they're going to go to an apartment complex. So making sure that the school systems are very strong and very good, that definitely helps when we analyze properties.
Yeah, yeah, yeah. Those are some very good points, man. Those were some good nuggets there. I'm sure.
There
I'm
you
sure some
go.
people took some good notes there for sure.
Good, good.
For sure, man. So tell me, when you're looking at a deal, like obviously there's different levels when you're investing. What's the unit count you're trying to focus on, and why are you focused on that specific unit count?
That's a great question. And I know a lot of people are across the board when it comes to unit counts. Our main
Right.
focus is over 100 units, but I'm not going to pass up a good deal. Really, we've done 44 previously, and with that 44 comes a lot of headaches, and the
Yeah.
profit is not there.
Right.
Profits, it's not there. So you're spending more time worried about a smaller complex, and the profit's not there. And all of the investors, every syndicator and operator, they want a large profit.
Yeah.
So focusing over 100 units, we found that it's a numbers game, and the numbers just make a lot more sense with when it comes to returns, when it comes to stability, when it comes to selling the property for a resale,
Yeah.
depending on, are you going to sell to an institution, or are you going to sell to a REIT, or are you going to sell to another private equity firm,
Right.
or a family office? So when it comes to that, that's why we like to focus over 100 units, but really our bare bottom minimum would be no less than no less than 80 units. So
Yeah.
we like really 80 or above, but our draw the line criteria is 100 plus. But like we just lost out to an off market deal. It was us and two other parties that the broker presented to, and it was 96 units.
Yeah. Yeah.
That's fine because the numbers were phenomenal, location was phenomenal, hit
Yeah.
all the other parts of our criteria.
Right.
So that's fine. We don't mind taking, our criteria we have, and then we have a criteria under that. So if it doesn't meet that, it has to meet the other one. If it doesn't, then, we will pass on it. And I passed on some great deals that had, from our underwriting, had huge returns.
Yeah.
But location I didn't like. And,
Right.
some people ask me, are you serious? And I said, I don't like the location.
Right.
The numbers look good, but I don't like the location, and I will not invest in a property that I would not live in.
Yeah.
So the only properties that, I would want in our portfolio is properties that I would live in and I would put my mom in.
Right.
And that speaks, volume, that making sure you have a great portfolio.
Oh yeah. Oh yeah. Most definitely. Now, when you're looking at these deals, and you said you turned down a few. Obviously, location is a red flag for you. But what are some other red flags when you're looking at the numbers as far as underwriting them?
Yeah, great question. Another big one is CapEx budget. And for some people that may not know what CapEx budget is, CapEx is referred to the renovation budget that you are either raising for or getting a bridge loan to
Right.
renovate the units. Now, I had a conversation with a large developer here in the Charlotte area, and I said,
Mm-hmm.
one thing that doesn't make sense to me is some individuals are, having huge CapEx budgets. And they're doing large renovations.
Right.
And those large renovations, maybe 10,000, 12,000, 15,000 per door.
Right.
I said, what I don't understand is you can build new construction for the same price.
Right.
So I said, why do a value add? Because, in 5 years, that new construction will be worth more than the value add play if you're spending about the same
Yeah.
to, renovate the units where you can just build the unit. So when it comes to CapEx, there is a certain number that when underwriting, I do not like to go over. And if
Yeah.
I feel during the walkthrough, based off of the property and what the property managers told me, that we are over that number, I will pass on the property because what other hidden things may pop out that you don't know of.
Right.
That's extremely important.
Oh yeah, man. That's something a lot of people don't think about, that capex budget, and
It will
that,
come back and bite you, and it's not fun when it does.
yeah, I can imagine. So, well, going into the next question, what are some of the, I guess, biggest rookie mistakes? Because a lot of people are trying to get into the syndication space. Like, what are the mistakes you're seeing that new people make?
Yeah, great question. I think the biggest mistakes is, or a handful of them. One is they need to understand when it comes to the regulation and rules of the SEC. I think it's extremely important to understand it. You need to,
Right,
and if it may be boring, but you definitely don't want to be on the other side of things. So
right.
really study that at a very high level. I know there's a ton of YouTube videos. There's a ton of you can go on their website and read things. There's tons of attorneys out there that are posting great content, and you can reach out to them to ask them any questions.
Yeah,
That right there is extremely beneficial. I know I still do that just to make sure I haven't missed anything, make sure I'm always staying up to date with it.
right.
That's a big thing. So if you're a newbie out there, I would say I highly recommend hopping on YouTube, SEC website, chatting with SEC attorneys that just specialize it and really get the foundation of how everything's operated.
Yeah,
Second and foremost is a lot of people think they need to find the deal first
yeah,
and that they don't need to raise the money.
yeah.
So I think that you need to raise the money, because if you don't have the money, then you can't fund the deal.
Right.
So you can't go out there, knowing your SEC laws, you can't go out there and just start trying to raise money from everybody. But you can go out there and network with everybody. Let them know what markets you're focusing on. Let them know what you're doing, and networking at a very high level. And once you get individuals, I highly recommend co-sponsoring with individuals and raise money for them
Yeah,
on the co-sponsoring operation side, and help get a deal funded, so
yeah.
you can start to get your name out there,
Right.
and everyone can start to know that, okay, they can invest alongside of you into a property, and they can get returns on it. So I think it's very important to start building and start networking very quickly, and so that you are able to, when you do find that right deal and building relationships with the
Yep.
brokers, when you do find that right deal, you'll be able to raise the equity to close on the property and do the renovations.
Yeah. Now, quick point here. When talking about networking, there's different venues you can go to.
Oh yeah.
You got your BNIs and your networking events and your local chambers. Like, but where are you finding these high net worth individuals? So other people can say, okay, I need to go here, and I could probably meet somebody. Like, what are those locations you're going to?
Yeah, great question. I think when it comes to high net worth individuals, I think the country club, that's fading out. I do, but you're going to find older high net worth individuals there.
Yeah.
Really, networking at a very high level. If you go to my social media, everyone knows what I do now.
Yeah.
I'm very heavily on social media, Instagram, Chris_Salerno_. I post a ton of content on there, so a lot of people can see that. And that has boosted tremendously. And networking on social media is definitely something I focus on,
Yeah.
because you can do it from home, you can do it from anywhere, and it's virtual. You can contact anyone across the whole United States. So that's been a big help. LinkedIn is also a big help. Those are all business professionals. But if you want to
Yeah.
go out and about, go to your local networking events, go to your real estate meetup events. I don't know if you guys have any real estate meetup events in Greenville. I know I'm
Hmm.
starting one across the Carolinas. So
Yeah.
if you don't, definitely would love to talk to you about being a host of one.
Yeah.
But it's really doing that, going to real estate meetup events and networking there. That definitely helps
Right.
tremendously. And then also, if you go to car shows, I go to car shows with friends of mine who have all those fancy cars,
Yeah.
and I network with everybody there. If you go to horse races or horse shows, that's you're going to find a lot of high net worth individuals when it comes to
Yeah.
those type of competitions, or those type of events, I should
Right.
say.
Right.
So things like that, and just marketing to them. All your doctors,
Yeah.
talking to doctors and dentists and attorneys. They also are high net worth individuals and want to invest. So there's a handful of
Right.
routes that you can take.
Yeah. Those some good points, man. Appreciate you sharing that. All right, man. So let's segue into the next segment of the show. We're going to do a deal deep dive, and just one of the deals you've done this year that's most memorable. Let's look into it and let's talk about it.
Yeah, definitely. So I can't give some, depending on the information, because each deal's different and our regulations are different. I can only give some information.
Yeah,
but
just share what you can.
Yeah, for sure.
Yeah.
So we'll talk about a 44-unit complex in Charlotte, North Carolina.
Yeah.
It was off market, and how I found it was I was touring a 91-unit complex.
Mm-hmm.
And I'm glad we're talking about it because we can go back and talk about relationships in this too. Yeah. I was touring a 91-unit complex, and I looked over adjacent, and I saw another complex. I said, well, to the broker, I said, hey, does the owner own that one? He said, no. I said, well, would they combine it? I want 135.
Right.
He says, let me find out. Calls me back later that day. Yes, they will combine it. Perfect. Let's do this.
Yeah.
So submitted an LOI on both. I lost out in the 91. 2 days later, I called the broker back. I said, well, hey, is the 44 still available? They said, yes. The guy next to it didn't buy it. I said, well, did he know of it? He said, no. I said, well, get me in it. Let me take a look.
Right.
So got me in. I took a look. We liked it a lot. We did a 506C. Regulation D on that one. So as a 506C, you're allowed to market the property.
Right.
You're allowed to post on social media. You're allowed to market the property. The caveat is you have to have only accredited investors invest in it, and you have to have a third-party verification verify that they are accredited. So
now, hold on. Let me just pause you there for a second.
Yeah.
Now, why did you decide to go with a 506 instead of a 50B on this one?
It was a smaller raise, and we wanted to test the 50C, market and our marketing plan. And also it helped me as me leaving residential real estate and going into this industry, because when I posted it, everyone thought I was selling one individual unit. And I was like, no. We're buying the whole complex.
Right.
And it's a lot easier. Not a lot easier. It is difficult. Any raise is difficult, but I also like it because you have a third party verifying the investors.
Yeah.
So if any reason, the SEC comes and knocks on your door and asks for those documents, you can provide the documents from the third party that verified each investor.
Right.
So that's extremely important.
Yeah.
So when it comes to it, so that's what we did on that, and we were able to go ahead and get that property fully funded. Renovations are on their way, and everyone's extremely excited about it. And we're hitting our pro forma. This time it's very slow because it's the holidays, but we're on track to hit our pro forma, and we're extremely excited about it. And a couple months later after that closes, I ran into the owner who owned the 91 units.
Yeah.
So I ran into him. I said, oh, you own that complex? He just sold it. And he didn't pick our LOI. So I bust his chops on that one.
Yeah.
And then about a month after that, him and I are out at dinner. And then I just had lunch with him 3 days ago, and we're planning something huge for all real estate investors, operators, syndicators, you name it when it comes to the real estate industry here in the Charlotte area. We're going to partner on it. So it's funny how things work. And they own over 6,500 units.
Wow.
Yeah, so they're a large operator. So it's funny how things work, but it's building strong relationships. And the biggest thing, and when people listen to me on social media and everywhere, is that the first thing I do when I meet an individual is how can I add value to them in their personal life and in their business life? What can I do to add value in their personal life and business life? Right. That's what I think to myself. Yeah. And I find a way to add value to anyone and everyone I meet. And if you do that, you will build strong relationships for the future. The biggest thing is don't ask for anything in return, and you will definitely see your business grow.
Right. I forget who's the quote's by, but if you don't add value to people, you devalue them. So,
Oh, I like that.
yeah,
I've never
I
heard of
cannot
that.
think of who the person is, but I'll get it to you later, man. But yeah, it's
Yeah.
like nobody wants to be around a vampire, man. He constantly
No, I
sucking the
agree.
life out of you, man. Like
I
that's the
agree.
worst person ever to be around,
Oh, I agree. And negativity. I had there's a young kid that asked me to coffee this morning, and normally I will not do it.
Yeah,
But I told him I'm available 6 a.m. Now, if
yeah,
he's gonna wake up at 6 a.m. and drive 40 minutes to meet me, I'll give him 30 minutes of my time.
yes.
So, and I love coffee, so why not? So
Right.
we went and got coffee, and I added value to him very quickly. But he's looking to get into the real estate industry, but I made sure that he got all the value and all the golden nuggets to
Yeah,
help him make his decision and take his business to the next level. And it's extremely important, to give back. And a lot of people, I have some people that pay me for my time, but
yeah,
there's that one time I will give back for free,
yeah.
because I believe in laws of attraction. It's going to come back and help our business grow.
Absolutely, absolutely. Now, we didn't touch on what was the value add on those 44 units. Like, what was it that you seen that you said, okay, if we can do this to it, this will increase the NOI for us.
Yeah, great question. So, one, rents were below market.
Mm-hmm.
Rents were totally below market, and we went in there and we did no value add to the units, and they were charging around 750, 800, and we were able to charge 950 to 1,000 on no renovations at all.
Wow.
So that's a big jump.
Oh yeah. Oh
The
yeah.
second big thing is I love breaking down T12s or P&Ls, they call it,
Yeah.
and really dig deep into them. And I found out that the previous property management company was charging, it was like $51,422. Don't hold me to that number, but it's in that ballpark.
Yeah.
That they were charging for an on-site manager. Well, there was no on-site office at all.
Wow.
So I was like, I didn't tell the sellers, why are you paying that? Well,
Yeah.
I was like, well, there we go. We save, all of our investors $51,422. So
Yeah.
it's little things like that, really digging deep into the financials of a property to understand it and to make sure, it's a good value add play. And then, so just from there, if the rents are below market, if the expenses are extremely high, you can you can cut them.
Yeah.
Go ahead and go after it. Also, what can you add value to the property? Can you add a swimming pool? Can you add better landscaping? Can you paint the exterior? Can you paint the roof, or can you get a new roof on it?
Yeah.
Can you do the inside of the units with LPV flooring? Paint the walls gray,
Right.
scraping the popcorn ceilings off, adding hard surface, white countertops,
Yeah.
white cabinets, backsplash, or do you have to go granite to reach your performa?
Yeah.
Do you need backsplash or stainless steel appliances? All those little things right there to add value. And once you do it for so long,
Yeah.
and I've been in flipping and I've been in that type of construction world. I'm not a contractor, but I've been,
Yeah.
in that construction world. You really you really get a good idea
Yeah.
of, when you walk into a unit, what it will probably cost per door.
Right.
You
Right.
really get a good foundation. Then
Yeah.
during your due diligence, I make sure that I have the contractors come. I make sure that I have the guys who can get, prices dirt cheap from overseas come and
Yeah.
really analyze and, make sure that I am, hopefully I over budgeted, because
Yeah.
that's always good. But make sure that we are in budget and we can go ahead and get the renovations to reach our performa.
Right. Right. Man, that's good. That's good there for sure. Now, as far as the debt, what kind of debt did you put on this property?
Yeah, so I don't want to jump into specifics,
Yeah.
but normally we look for any type of property in LTV, which is a loan to value, of
Yeah.
anywhere from 70 to 80%. Right now, depending on the renovations cost, you can
Yeah.
do an LTC, loan to cost,
Yeah.
and also called a bridge loan, and get that CapEx,
Yeah.
the budget that you raised for renovations, funded in the loan.
Yeah.
So there's also two different options. I know right now, actually, because of the relationships, like you said, that we've built with lenders, they're offering us 83% LTC.
Man, that's great.
And 83% LTV, but I will not go over 80%.
Right.
I told our lenders, listen, don't, it looks good, thanks, cherry on
Yeah.
top, but I'm not going to take it.
Right.
I want 80%. I don't want to over leverage, and it may sound good because you don't have to raise, as much money, but
Yeah.
you need to think long term for everybody who's in the deal, and you
Right.
definitely don't want to over leverage because it can hurt you.
Right. Right. And that brings me to my last question in this segment. Um, what is the exit on it? Do you guys plan on adding value then selling in a couple of years, or do you want to refi and hold?
Great question. So I won't particularly say on that deal, but
Yeah.
what we normally like to do is we like to exit anywhere in the ballpark of 5 to 7 years. Now,
Okay.
that all is going to depend on the market and our performer.
Yeah.
If we can reach our performer within that time frame, we will go ahead and exit the property in a sale.
Yeah.
We have looked to explore the options and the routes of refinancing a property and making sure all of our investors are paid out, and then keeping the property for the company.
Yeah.
We've looked at that option, but right now it is not on the horizon.
Yeah.
Who knows, it may come up. But our main objective is that 5 to 7 year hold with the sale.
Right. Right. Gotcha. All right, man. It was good to go through that deal there, man. Got some good insight from it.
Yeah, pleasure. I always love and talking real estate. I can talk for days.
Me too. All right, man. So let's segue to the last segment of the show, the lightning round, man. Real quick, 5 questions for you. All right.
I love it. Let's go.
All right. So what's the best advice you ever been given?
Best advice I've ever been given. Ooh, that's a good one. I don't know if it was given to me. I read it. I like Warren Buffett's advice. Rule number 1, never lose money. And rule number 2, don't forget rule number 1. I love that advice.
That's good.
I think it's very important. But another thing is I watch a documentary on, I study a lot of billionaires, and I watched a documentary on Warren Buffett.
Yeah.
And he said there was a batter that he watched when he was younger. And if everyone watches baseball or have watched any type, they, I don't watch it, but they do a little box around the strike zone.
Yeah.
And he said that this batter calculated, depending on where that ball landed, is what his batting average is going to be for that game.
Yeah.
And he said that's what he does. He calculates where a business is operating in his strike zone, and he knows when to buy and when to sell and when to hold based off of where it's located in that strike zone.
Yeah.
And he knows what his projected returns will be. So that was really good advice, and it goes back to focus on your one thing.
Right.
Don't look outside of that strike zone. Focus on your one thing. If it's going to be multifamily real estate, focus on it. If it's going to be flipping, focus on it. Wholesaling, selling residential, selling commercial, focus on that. And then once you focus on it and grow a huge business, then start to diverse. So that was something that I will always remember and I love.
Oh, man, that's some great advice. Great advice. What's the best book you've read this year?
Ooh, best book. I've read a lot, and I'm looking at them right now. Ooh, that's a good one. I love the book called Mistakes Millionaires Make. That's a really good book. It speaks about how individuals grew a huge net worth. I mean, 200, 300, 400 million in the net worth and lost it all, went into debt, and then built it all back up. Wow. And at the very end of each chapter, it explains, what you should have in insurance, what you need to have for attorneys, all those little things. So I think that is a great book. Mistakes Millionaires Makes, a wonderful book that I've read.
Yeah, that's great. I haven't read that. I'm going to check that one out for sure.
Yeah, definitely.
All right. So what are some rituals you're doing right now to make you better at what you as an investor or just person in general, what are some rituals
I love it.
for you?
Yeah, I love it. So the biggest thing is when it comes to extremely successful people, and I'm not putting myself in there into that category, but I'm saying I've studied them, and billionaires. What comes to it, and I watched a documentary on Bill Gates, and the only thing you and I and all your listeners cannot buy, and it's something that is expiring. For all of us, no matter who you are, where you live in the country or the world, what is expiring is our time.
Right.
And so I make sure that I like to have and I have a manage of my time. So managing my time is very important. So I make sure I do that with a strict schedule. And yes, you do veer off from it, from
Yeah.
emergencies that happen, that life comes up and you have to veer off from that time management. But it's very important to make sure, that time management. And as entrepreneurs, your spouse will come in and think you don't work and say, hey, can you do this for me? Can you do that for me?
Right.
And it's like, listen, honey, I need to work. So time management is a big thing I do. I wake up every morning now between 5 to 5:30 and go on a run for about 1.2 to 1.5 miles.
Yeah.
No matter the condition it's in outside. So that's a big thing. I meditate 30 minutes in the morning, 30 minutes in the evening, to reflect on what I'm going to do for the day and what I did for the day.
Yeah.
So that's what I do. And it's like my alone time. I do that in the shower because of the sound of the water. And it just like my mind goes into a whole nother world. And it's my alone time. So those are a couple things I do. But reading books, listening to podcasts, YouTube, reading articles on the market, real estate in general, and how everything's going. That's my main focus.
Gotcha. So I guess you kind of answered this in your last question, but what is one thing you're doing right now to help you improve your business?
Yeah, one thing I'm doing right now is networking at a very high level, pouring out great content like you do on your podcast. That's one thing I do at a very high level, to just make sure and help educate people, help people reach their goals, help people. That's my goal. My goal is to leave a legacy. And the way I see that is if I can get everyone, to become financially free in their own eyes, by investing in large multifamily real estate. So that's my goal. And I think, leaving a legacy and helping people and educating people is one thing I do in my business to grow my business, and just be very active on social media with networking.
Right. Okay. Last question here for you. If you can give your younger self, and I know you're still pretty young, if you can give your younger self one tip in regards to investing, what would that be?
In regards to investing, that's a good one. I would say if my younger self was looking to invest, my tip would be one, get knowledgeable about it, because when you start dealing with larger price properties, you're talking larger profits, but you're also talking larger risk. So wherever there's a large profit, there is a large risk. So reading and understanding, how things are operated, making sure you're doing it the legal way, making sure that, you have understood your risk and your profits and, what you can and cannot do. And then alternatively, really just focusing on multifamily in the commercial industry. If I could go back, I wouldn't have focused on single family, even though it helped me. I would say just build relationships with brokers. I would focus on operating and running a business in the commercial industry.
Gotcha. Man, that was some good stuff, man.
Yeah, I love it.
I know my listeners got a lot out of this podcast, man. Tell them how can they get in touch with you?
Yeah, I love it. Everyone can reach out to me on Instagram. It's Chris_Salerno_. From there, you can go ahead and just hop in and direct message me. And if you have any questions, if you'd like my email, that would be the quickest way to email me. Is if you go in there, you can actually see my website on my profile. Click on my website, and then you'll have access to my email. But I like to draw everybody to my Instagram because I post my YouTube stuff on there. I post all my content on there, and that would be the quickest way to gain knowledge about, multifamily and how everything's operated, and also get a hold of me.
Gotcha. Well, hey, man, I appreciate you coming on today, Chris.
Hey, it's a pleasure. Thank you for having me.
Yes, sir.
All right. Bye.
Thank you for listening to the Generational Wealth Through Commercial Real Estate podcast, brought to you by Onyx Capital Investments. Onyx Capital Investments works with investors nationwide to invest in income-producing real estate in emerging markets. Connect online at www.onyxcapitalinvestments.com to learn more about what we're doing. If we have added value to your life, please leave us a review.